Hey everyone, and welcome back to Tax and GST India. Are you tired of complicated capital gains calculations? Do you struggle to understand how different asset types, holding periods, and tax regimes impact your tax liability in India? Well, you're in luck. Today, I'm thrilled to introduce you to the Advanced Capital Gains Calculator, your new best friend for simplifying tax planning. This isn't just any calculator, it's a comprehensive tool designed specifically for Indian capital gains. It helps you understand your tax obligations for various assets, from equity and mutual funds to immovable property and even virtual digital assets. We've even incorporated the latest tax laws up to financial year 2025 to 26, including some crucial updates you need to know about. To access this tool, go to Google and type Smart Study Blog without any spaces. Select the first link, smartstudyblog.com. If you are on a mobile device, look for a menu icon with 3 dashes in the top left corner, select it, and then choose Tool from the menu bar. If you are using a desktop, you will find the tool menu directly on the home page. Under Tax and GST India, select Capital Gains Tax India. The Advanced Capital Gains Calculator will then open. Let's dive into how to use this powerful tool. It's incredibly intuitive. First, enter your date of birth. This is crucial, as the calculator features age-based slab rates. It automatically accounts for your age, categorizing you as a general, senior, or super senior citizen, as this impacts slab rates in the old tax regime. Next, choose your financial year of sale. This allows for flexible financial year selection, so you can plan for current or future years. Then, select your preferred tax regime. This lets you see how your tax liability changes based on the old versus new tax regime you choose. A quick note here. Once you've added your first capital gain or loss, the date of birth, financial year of sale, and tax regime inputs will be locked. This ensures consistency for all transactions within that specific calculation. Now, let's add your asset details. Choose your asset type from the drop-down. This is where you'll see the dynamic asset type handling in action. The tool automatically adjusts calculations based on your selection, determining if your gain is a short-term capital gain or long-term capital gain and applying the correct holding period rules. You'll notice that "Is this a share buyback?" option appears only for listed equity/equity MF STT paid assets. The calculator is smart like that. If you select yes for a share buyback, the calculator understands that proceeds are treated as deemed dividends, and your cost becomes a capital loss. Input your date of acquisition and the cost of acquisition. For long-term gains, the calculator features automatic indexation, where it smartly applies the cost inflation index to reduce your taxable gain. We have cost inflation index data all the way from 2001 to 2002 up to projected figures for 2025 to 26. Remember, for assets acquired before April 1, 2001, the calculator will correctly use the 2001 to 2002 base year index. Next, enter the exact date of sale and your sale consideration. Once all details are in, hit Add Capital Gain/Loss to Summary. You'll see your transaction appear in the summary table, which provides a quick overview of the asset type, holding period, and the calculated gain or loss. Like this, you're able to add a list of capital gains and capital losses for various assets one by one. Don't forget to add your other income. This is vital for accurate slab rate calculations. This input has been moved to the summary section for easier access. The real magic happens when you look at the total estimated tax payable and the tax calculation breakdown. Here, you get a detailed breakdown of your tax calculation. It distinguishes between fixed-rate gains and gains taxed at slab rates, which are combined with your other income. It even shows how your other income interacts with your capital gains for slab rate calculations. The calculator also automatically applies the Section 87A rebate if your income qualifies, helping you maximize your savings. Crucially, the calculator intelligently handles loss set-off and carry forward. It sets off capital losses against gains and clearly shows your unutilized loss eligible for carry forward. It also includes the special rule for financial year 2025 to 26, the one-time rule allowing long-term capital loss to be set off against short-term capital gain for that specific financial year. You will also see any virtual digital assets losses, which are correctly shown as not eligible for set-off or carry forward as per current laws. Below the summary, you'll find important notes regarding tax laws, especially the special financial year 2025 to 26 rule for long-term loss set-off. Remember, while this tool is incredibly helpful, tax laws are complex, and it's always advisable to consult a qualified tax professional for personalized advice. This advanced capital gains calculator empowers you to make informed financial decisions and plan your taxes with confidence. No more guesswork, no more complex spreadsheets. If you found this tutorial helpful, please give it a thumbs up, share it with your friends, and subscribe to Tax and GST India for more financial tools and insights. And don't forget to hit that notification bell so you don't miss our next video. What other financial calculators would you like to see? Let me know in the comments.